Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Noah Kerner, CEO of Acorns. Noah, great to see you.
Good to be here.
So, Acorns has been around for a while. I want to get an update, but maybe for people who aren't familiar with the company, can you give us just a brief on it?
We like to say that we are the financial wellness app, and so our purpose is to help everyday Americans, primarily the middle class, save and invest for a brighter future. So
No, so how does it work practically?
Yeah,
sorry.
Basically, when you sign up, you connect you give us a bunch of information, you connect your funding source, you can link debit cards, credit cards. That allows us to round up and invest a spare change, which is kind of a feature that we're well known for. And then you finish registration, you tell us a bunch about yourself. We can construct a diversified portfolio for you based on suitability questions. And then it's really easy to just start automatically investing. Spare change, $5 a day, $25 a week. You can set up a retirement account, kids investment account, et cetera.
Right, so no brick and mortar.
No brick and mortar.
But there's so many places you can go with that. I mean, do you do direct deposit for your paycheck at this point, stuff like that?
We do. Everything we do comes back to helping people maximize their saving and investing. So the paycheck function allows us to automatically save and invest part of your paycheck. So that's the way. It's not just to capture your paycheck for the sake of capturing your paycheck.
Yeah. And so how old is the company and how big is it now, Noah?
10 years old. We launched in August 2014, and we have about 800 employees.
Okay, and then how many customers, how much AUM? Are there other metrics you can share?
6 million, it's a subscription business, so 6 million subscribers, and we've helped everyday people save and invest over $22 billion now. And by the way, in small amounts.
Right. Other companies, other banks have products and services that are similar. How are you different?
I think we're different in a lot of ways. I think beginning with our values and mission of simplicity, accessibility, who we serve, starting with the middle class, having a business model that's based on subscription and doesn't monetize complicated activities and behaviors like spending or borrowing or these kinds of things. Everything at Acorns is about helping people save and invest as much as they can for the future. On the investing side, it's all diversified portfolios. We try to encourage people to take a long-term view, benefit from compounding. So I think it's quite different in many ways, the features that we offer, but we're also best understood by the things that we don't offer.
Like what don't you offer?
Credit cards, loans.
Why don't you do those things?
We're trying to help people save and invest as much as possible.
So credit cards and loans don't necessarily do that? Right. I'm sorry, I interrupt you. What else do you not do?
Stock trading. Yeah.
Huh, is stock trading a bad thing, Noah?
I think so. I mean, it breaks the compounding cycle. So we try to encourage people to be diversified, stick with it for the long term, and that's the whole kind of ethos of the product and the company.
Right. And how is the business growing? How's it doing?
Good. We're doing well. I mean, 6 million subscribers in 10 years. We just acquired the leading kids money app in the UK called GoHenry. So we're rolling out Acorns Early in the United States, like this sort of robust version of Acorns Early, which is a product that allows parents to invest in their kids and then kids to start getting engaged at 6 or 7 years old with an allowance card. Parents can fund the allowance card for doing chores and learning about money. Kids can save, they can give. We want them to grow up with Acorns Early, graduate into Acorns. As they become parents, ultimately bring their kids into Acorns Early and sort of create the nice cycle, the family life cycle.
All right, now some people would say that's a wonderful thing. You're helping young people learn how to save. Other people would say, well, you're trying to get them while they're young. How would you respond to the latter point?
Both. We're trying to do both. Okay. We're trying to get them learning about money and saving when they're young. Mm-hmm. I think,
and get them to be customers. That was my point.
Yeah, of course. But I think when you look at our company and our product, it's totally aligned to the best interest of the customers and stepping in where also the schools don't. You know, where kids are not learning about money. They learn math, but they don't learn money. So we want to make sure they learn money.
Right. Financial literacy is a big thing. People talk about it, but people don't really do anything about it, right? Or schools don't necessarily. How and why do you think financial services companies have failed Americans, Noah?
We talk a lot about your money first, ours next. And I think financial services as a business generally is our money first, yours next. So I hope this isn't too cynical, but I look at the consumer financial services products as one big drop-down menu of options. And as a consumer, when I look at what those options are, they seem to be determined by how much money the bank or the financial institution can make. And the best interest of the customers, in other words, are you saving for emergencies? Are you saving for investing for retirement? Are you investing? Are you spending smarter? Are you doing all the things that will give you the best life you can have financially speaking? That seems like a very distant second. We try our hardest to make sure that in Acorns, it's your money first, ours next. And the belief is if we put the customer at the center, put their financial best interest at the center, that ultimately in the long term will win. That might mean we sacrifice certain revenue streams in the short term, but
Right. I mean, you have some high-profile investors, BlackRock, PayPal, NBC, Universal. How do they feel about that notion where maybe they're not put first?
well, I think they invested in us because of the mission and the values of the company. So I think they share the belief that, I mean, look, we're espousing a long-term view to our customers. So if we don't hold that same view in the way we look at our own business, that would be a weird dichotomy. So I think they support it.
Fair enough. Some people say we have a savings crisis in this country, a retirement crisis in this country. Do you think that's true? And if so, why or why not?
It's 100% true. I mean, I think half of the people at retirement age don't have retirement savings, which is a huge, massive problem for the country. What does that mean? You know, that means people in retirement are going to be working through retirement. And I think a lot of people also rightfully feel like they can't rely on social safety nets that have traditionally been there for people. So it's a massive problem. And that's primarily why Acorns is so important and why we're getting also into the earlier stages of life. Because if we can get as many parents as possible investing in their kids at birth, I always say this statistic, but I love the statistic of $5 a day at birth through retirement is $4.5 million at an 8% annual compound rate.
So in other words, if you save $5 a day every day from when you were born, obviously your parents do it for the first few years,
and then you take over.
and it's compounded at 8%, and then at 65 or 72, whatever number you...
65, it's
65,
$4.5 million.
$4.5 million.
Yeah. So, you know, we have to get people saving and investing for their kids, or particularly investing for their kids as early as possible. But getting people at 18, 25, 30, it's never too late. The problem is every year that goes by makes it more complicated. So,
Have you ever thought about why we have this problem? Is it our hedonistic culture? Is it the lack of government support? Is it companies just making a quick buck and not providing for people?
I think about it all the time. I mean, I think that the entire economy is propped up on spending. So we have a spending culture. GDP is based on spending. It's spending. Savings not really incentivized. So that's, to me, is the root of the problem. And I think the entire financial services industry, for the most part, follows suit. And it's like, you know, I mean, spending is highly monetizable. So how do you build a model that monetizes saving, particularly for the middle class, which is not a customer segment that the industry has traditionally focused on because it's tougher to monetize, right? So that's why we chose subscription. The assets under management business doesn't really work for people that don't have a ton of assets. So the question is, how do you build a scalable business to serve the middle class, that's making sure they're saving as much as possible? And that's where subscription comes in.
Do you ever look at the national debt as a percentage of GDP, which supposedly is as high as it's ever been, 132%? I mean, is that a metaphor or some sort of parallel universe to what you're talking about?
I actually just wrote like a little, we just published a little piece about the idea that the American dream is still alive. And we looked at like what America would look like if 100 million Americans were doing what the millions of Acorns customers were doing every day, meaning they had a little bit of assets and they were investing, we calculated it at $3 a day. And in 40 years, the statistics are that they would have $38 trillion, which is higher than the national debt today. That's a little bit how I try to put things in context that way for people to inspire and motivate people to take action now. I think when people look at these massive numbers like the national debt, they get totally overwhelmed, and it makes people feel helpless in many ways. So our challenge is like, how do we motivate people to take action and confront inertia? Inertia is the biggest problem for people. I'm going to put off today what I can do tomorrow, but every day you put it off is a problem.
Right. Why did you, I'm curious, I saw that piece, The American Dream is Not Dead. Why did you frame it that way? Meaning a lot of people think it is dead.
a lot of people think it is dead. I
Right.
try to meet people where they are.
Right. Okay.
So I use the language that people, and then try to flip it. So that was my
So in other words,
successful or not.
you hear people saying that the American dream is dead, meaning what exactly? What part of the dream is dead?
Meaning they don't believe that the idea of upward mobility is alive and well, and I think it's perpetuated constantly in the news, and you hear this story a lot. But the with flat wages and things like this for the middle class, is like the question is, how do you actually have? I equate American dream to upward mobility, and I think there's also this interesting narrative in culture where people who come from nothing and make it. That's like the American dream is to come from nothing and make it. But in a lot of ways, once you've made it, you get villainized in American culture. It's like, oh, you're a millionaire or a billionaire or whatever, whatever. You've made it. Now it's a sort of smack in the face to the idea of the American dream, which is like, we should celebrate people who have come from nothing and made it. That's part of it. And then the question is, how do you have upward mobility? And the best way to have upward mobility, especially with flat wages, is to save and invest, is to invest a little bit of money as much as you can every day for a really long period of time. So that's
Right. So in your vision, if the middle class all became rich or all had $4.5 million, that would be success. And one part of it, right?
for sure.
Right.
For sure.
Right. I want to go back to asking you about some investors because I know you have some celebrity investors. Reportedly Jennifer Lopez, Alex Rodriguez, Bono, Ashton Kutcher, Kevin Durant. Are they investors, and what do they bring to the table?
And Dwayne Johnson.
And Dwayne Johnson.
Yeah, who we launched a product with. But I think they're supporters of the idea first that from tiny acorns, mighty oaks to grow. Like all of these people, to the point of upward mobility, came from humble beginnings and grew into mighty oaks. So they represent the story of Acorns. It wasn't originally just like, let's get celebrity investors, which I think sometimes it was, let's partner with people, bring them in as investors who reflect the story, and then hopefully they'll help tell that story to more people. And so some of them have certainly, Dwayne Johnson just co-created a product with us called the Mighty Oak Card. And the whole idea of the card is small amounts, commitment, hard work. You can grow into a mighty oak as well, which is the American dream.
But wait, it's not a credit card. What kind of card is it?
It's a debit card.
It's a debit card.
So it's got 3% APY on checking. It had until rates changed 5% on emergency savings, connected investment and retirement accounts, and then the feature where if you connect your paycheck, we automatically allocate the money across the products for you, so you're saving and investing as much as possible. And besides spare change, the best way to get people to save and invest is to stop them from spending their own money as soon as they get it. Well, for them to stop themselves, we don't.
Yeah, I remember there was this book, The Millionaire Next Door, written by a professor in Georgia. I think it was Georgia State maybe. And he said, first way to get rich in America, don't spend money.
That's right.
And I was like, just shut the book after that. I mean, that was the main message.
Hard way to get, the reason it's hard to get rich in America is because everything is promoting you spending your money.
Right.
So everywhere you turn.
Right. You almost went public, I understand, in 2022 through a SPAC. Mm-hmm. Why didn't you do that, and do you regret it?
Definitely don't regret it. We saw what was happening and realized it wouldn't be good for us to go public that way. So we stayed private. We raised a bunch of money at the time, and we're just focused on building the company.
But I also saw that you said you would go public at some time.
Yeah.
At some point. And how does that jibe with your feeling that the stock market's not a good thing?
How do you?
Well, you said that it's not good to buy stocks, didn't you?
Oh, no. I said it's not good to trade stocks.
Oh, trade stocks. Okay.
But I mean, look, we've built the company for 10 years. We've taken on a lot of capital. So I think ultimately it would be a big opportunity for the company to go public.
At some point.
At some point. Yeah.
Not this year?
No.
Okay. Tell us, Noah, about your leadership style. What kind of a people manager are you?
I'd like to think I try to approach managing people with humility, curiosity, courage. I try to encourage people to be courageous. I try to encourage people to be authentic. And we have our first value is lead with heart, which part of the description of that is inspire people to inspire yourself and others to move past all previous thresholds of possibility. So try to inspire people to reach and exceed their potential. And one of the things about my leadership style that is also reflected in our product. And so we have this screen called Potential, which is all about showing you what your long-term potential can be if you invest in yourself. So there's a lot of kind of similarities between leadership style and how we try to lead customers with the product.
What does your customer base tell you about the economy? How does it inform you about their thinking, optimistic, pessimistic about what's going on right now?
What's interesting is we've had a good retention profile throughout. So even in the spikes, up, down, et cetera, our customers have maintained pretty strong retention. So that tells me that, not pretty strong, actually quite strong retention. So that tells me that they're listening to our messages in education. They're sticking with it. They're using Acorns as it's intended, en masse, using Acorns as it's intended to be used. So I'm always encouraged by that, and that continues. And that was happening during the pandemic. That was happening when we had that incredible dip, like overnight dip on the 20th of March or 18th of March. So I'm always encouraged. I'm always encouraged when I see the kind of behavior that we intend to elicit happening, obviously. And of course, it just so happens that this is a really high retention for us means good outcomes for customers because the product is aligned to the best interest.
Right, but there's nothing like, in other words, when rates go up, your customers do X or Y necessarily.
Not typically. I mean, it's pretty consistent, And our message to customers is stick with it, invest regularly, focus on the long term. So I think that's what we get.
I'm curious, Noah, also about what kind of technology you guys are using. Anything that's very cutting edge, or using AI? How are those tools helping you, maybe?
I mean, we've been, in many ways, we were the first, or one of the first robo-advisors. So we've been using automation from the beginning. The power of Acorns and products like ours is how do you use automation to make accessible products that weren't otherwise accessible to as many people as possible. It's like, how do we put the responsible tools of wealth making in everyone's hands? So automating things is fundamental to Acorns, and we continue, whether it's machine learning or whatever, we continue to use automation to make the product easy and accessible to as many people as possible. And before these kinds of products, it's like, well, there's financial advisors. And now, of course, I don't need to tell you, but now there's products that automate that. And the more we can make that accessible, the more we can humanize it, the more we can bring that kind of advice and humanity to people and meet people where they are. One of the things actually, this is back to the leadership style, tell the company that we're in the business of managing emotions, which is a bit of a different sort of message than I think you'd hear in most financial services companies. But the more we can meet people and connect with people's anxieties, reduce people's anxieties, try to give people a sense of hope. And our great challenge is, like, how do we use technology to do that most effectively?
Yeah, just to follow up on that, Noah, I mean, because a lot of people can rail against financial advisors. Oh, they're saying, don't buy that stock just because it went up 300%. That's probably just the wrong thing to do. Or don't sell now, the market went down 200 points. That's what you're talking about. Mm-hmm. How can algorithms replicate that?
Well, I think what you just described is what we created. I don't mean for this to sound any sort of way, but like if Warren Buffett in a bottle, like if you bottled up Warren Buffett's sort of investing mantra and philosophies, that's what Acorns would centrally be. So in a way, we're not here trying to replace financial advisors. We're trying to make financial advisors accessible to as many people as possible, because human beings can only serve so many people. But similar, like in many ways, our philosophies are informed by, I have a financial advisor. And the advice that I get there is very much aligned to the similar advice that we give, right?
Right. So maybe if you got that $4.5 million when you were 65, you might need a financial advisor?
Sorry, if
in other words, if you did save that $5 a day and follow the Acorns all the way through your life,
I see.
Accumulated that wealth, maybe you would need a financial advisor.
There could be a circumstances where you might need different level of service and advice. We are trying to make it such that you can start young and grow old with us. Right. But depending on how complicated your needs are, by the way, we don't serve wealthy people. We serve the middle class. So, but yeah, it would be ridiculous of me to say that Acorns can serve absolutely anybody.
I mean, you hope to make them wealthy. That's my point.
100%.
Right. And final question, Noah, I want to ask you about you a little bit. You grew up here in New York City in the East Village. You went to Cornell, I believe. Yeah. You had a lot of different jobs. Tell us about some of those different jobs and then how you got to be the CEO of Acorns.
So I grew up in the East Village. I was into music and creativity really early. Got turntables when I was 13, 14.
Something like this?
Yep. Got into it as into the art of it, the craft of it, like scratching and beat juggling. Started doing hip hop nightclubs when I was 16. And then that was sort of the first leg of my career, if you will. Like I was working with different artists, and turned it into something that was both like a creative pursuit and a profession. And then started my first company when I was 21. That was in the hip hop space. 25, a product development and marketing agency serving young people, then a music company. Me and the co-founder of Acorns started Say, which I don't know if you know, is like a shareholder communications product that
Familiar maybe, but go ahead.
well, we're creating all these new investors. So we had this idea of, well, how do we enable them to actually vote their shares and use their say? So Say was, it was an attempt at creating something new that Broadridge hadn't created, basically, and ended up getting acquired. Acorns was really a natural progression from a fundamental shift that happened to me almost on a day, where I felt like working on creative things or things that got me excited personally was just not enough. And I needed to work on things that had a real central purpose, and I felt like were adding value in a different way. So I literally wrote down what those things were, and that became a filter for me. Wealth gap, medicine, health, education, these things. I don't want to do anything that's not those things. That was the sort of, in many ways, the progression into doing this work with Acorns.
And here you are.
And here I am.
Noah Kerner, CEO of Acorns. Thank you so much for joining us.
Thanks, Andy.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.